upcoming China summit with Xi Jinping unless Beijing helps reopen the Strait of Hormuz, of course, being one of the most critical oil shipping routes in the world. With energy markets already on edge after the Iran conflict, we'll break down why there's such a narrow waterway matters so much for global oil supply and why the US is putting pressure on China right now. Then we'll look at something interesting happening in the commodities market. Oil surged after the Iran conflict, but gold and silver did not explode higher the way many investors expected. Instead, precious metal actually pulled back from their recent highs. We'll explain the market logic behind this unusual reaction and what traders are calling the war tackle theory, which is influencing how investors are pricing geopolitical risk. After that, we'll break down a fascinating financial structure created by none other than Michael Saylor himself. So, Michael's strategy, their new product STRC, could turn investor demand for yield into direct structural Bitcoin buying, potentially creating a powerful new mechanism that continuously feeds capital into Bitcoin. And finally, we'll look at what's happening inside DeFi, where lending yields across major platforms are collapsing. Stablecoin returns on protocols like Aave have now fallen below 2%, raising the big question, are we just seeing a temporary slowdown or a DeFi entering a much deeper structural yield window? So later in the show, we also have a special guest, Alex Berge, the head of ecosystem growth at Ark Labs, will be joining us to talk about the future of Bitcoin infrastructure, the development of Arkade OS, and how new technologies could bring programmable finance and stablecoins onto Bitcoin. So definitely a lot to cover today. Let's get started with the first news of today's show. So tensions between the US and China may be rising again, surprise, surprise. So Donald Trump said he could delay his planned summit with Xi Jinping later this month. And the reason why he would do such things is because Washington wants Beijing to help reopen the Strait of Hormuz, being one of the most critical oil shipping routes in the whole world. So this comes as global energy markets remain on edge after the recent Iran conflict. So let's break it down. So the Strait of Hormuz, of course, like the most important energy choke point on the planet. About 1/5 of the entire world oil supply passes through the narrow and really narrow waterway. But after the conflict between the US, Israel, and Iran escalated, shipping through the strait has been partially disrupted. That disruption helped push oil prices to a very high prices. Right now, we're sitting at $106 per barrel on Brent crude oil. But like at one point, crude oil reached almost $120 per barrel. So reopening the strait has become a major priority for global markets. So in an interview with Financial Times, Donald Trump said he expects China to help unblock the strait before he travels to Beijing. The summit between Donald Trump and Xi Jinping have been scheduled for 31st of March till 2nd of April. But Donald Trump now says the visit may be delayed if there is no progress. So speaking aboard Air Force One, he said the US wants clarity before moving with the meeting. Behind the scenes, Treasury Secretary Scott Bessent also met with Chinese Vice Premier He Lifeng in Paris to discuss the upcoming summit. However, Beijing has not yet officially confirmed the meeting date. So if we quickly hopped on Polymarket and check out the polls, how many people expect that expect Donald Trump will visit China by a certain date? So 31st of March right now, it has dropped 34%. So only 31% of people think that this will happen in March. And then another 70% think, okay, Donald Trump will still visit China, but it's just like happened to be a delay. So Donald Trump's message is quite simple. He argues that China relies heavily on oil shipments that pass through the Strait of Hormuz. So, according to Donald Trump himself, about 90% of China's oil imports depend on that route. So, in his view, helping reopen the strait should be in China's own interest. The US has also been arguing European and Asian countries to assist in stabilizing the shipping route. However, analysts say Donald Trump's number may not fully reflect the reality in China. So China actually has spent like the last 2 decades diversifying its energy supply. So that includes building massive strategic oil reserves, expanding pipelines from Russia and Central Asia, and increasing domestic energy production. So as of January, China reportedly holds around 1.2 billion barrels of oil in storage. So that is enough to cover roughly 3 to 4 months of demand. In addition, oil passing through Strait of Hormuz now represent less than half of China's seaborne oil imports, and the strait accounts for only about 6.6% of China's total energy consumption. So the disruption may hurt China, of course, but not as much as Donald Trump would suggest. Another important detail is that Iranian oil exports to China have continued even after the conflict began. So satellite tracking data shows Iranian tankers are still delivering crude to Chinese ports. That suggests the energy trade between the two countries has not stopped completely, and that could reduce the urgency for China to intervene militarily. Another key factor is China's long-term energy strategy. So if we take a look at this graph, like over the past decade, China has heavily invested in clean energy technology. So that include wind energy or solar panels, and as like China is the number one when it comes to the EV adoption among the whole world. So today, China is the world's largest producer in many of those sectors. That shift toward alternative energy means China may be less vulnerable to oil shocks than in the past. And according to analysts, that could give Beijing more leverage in global energy negotiations. So the energy dispute is not the only source of tension. The US has already recently launched new trade investigations into several countries, including China. These probes focus on issues such as industrial overcapacity, forced labor concerns, and trade imbalances. China's Commerce Ministry responded strongly about this, accusing Washington of abusing the investigation process. Beijing called the measure unilateral, and officials warned China may take action to defend its interests. So the bigger picture here we're seeing is a very complex geopolitical moment. The US is trying to rally international support to stabilize global energy supply, while China is balancing its own strategic interests. And both sides are increasing pressure ahead of a high-stakes summit. For markets, the outcome could affect global oil prices, trade relationships, and geopolitical stability. Because when tensions between the world's two largest economies rise, the ripple effect rarely stay in just one sector. They often spread across the entire global economy. So speaking of the global economy, of course, we now have to head over to some so-called safe haven asset, because like usually when conflicts happen, when war broke out, safe haven assets like gold, like silver would go up. But this time is very, very different. Like since the US and Israel launched strikes on Iran on 28th of February, oil prices, as I was showing a minute ago, it surged sharply and nearly touched $120 per barrel. But gold and silver, on the other hand, they are retracing and is right now having a massive correction. So people are starting to wonder if the narrative of safe haven asset is still is still in place right now. There's actually several reasons why gold and silver are not doing particularly well, and one of that is like the macro backdrop. So recently, if we take a look at the DXY rebounded quite sharply. Not to mention treasury yields moved higher, real rates stay firm. That hurts precious metals in the short term because gold and silver do not pay interest. So when bond yields rise and dollar just simply gets stronger, metals become less attractive, especially to non-US investors. Silver is even more vulnerable because it is not a technically not a safe haven asset, is an industrial metal. That means silver gets hit harder if investors worry about slower economic growth. So there are actually a combination of reason, and not to mention like earlier this year, gold and silver absolutely skyrocketed. So it makes sense to have a stronger pullback right now. So instead of like asking like what is the market really saying right now, and it's saying like the conflict is very serious to push oil price higher, but it's not serious enough, at least for now, to trigger a full panic into precious metals. That means investors are still betting on a scenario of limited chaos, but a very controlled ending. If the view is right, gold and silver may stay in a very choppy range for now. But if that view is wrong, the conflict expands into a lasting energy inflation crisis, then the classic war trade could return very fast. And in that case, gold and silver may not just rise, they could trigger a much bigger second phase rally. So, of course, we are tracking the market very, very closely. Well, there's actually a lot of news I want to go over today. So let's shift gears a little bit and let's look at STRC. So understanding how this product works would definitely give you an edge, especially during volatile time like this. And STRC is paying you a stable yield of 11.5% for the moment being. So it's definitely worth knowing and actually understand how it works. So of course, this product is created by none other than Michael Saylor himself or MicroStrategy. So right now, you can get 11.5% paid monthly. But the most important part is not about the yield. Like, it's the real story is how demand for this product can actually directly turn into structural Bitcoin buying pressure. So let's break it down how it works. So first, what is STRC? You might ask. So STRC is a preferred stock issued by MicroStrategy. It behaves somewhat like a bond because investors receive regular dividends, but technically it's still equity, meaning strategy never has to repay the principal. This is important because it means the company cannot default on it like some traditional debt. In the capital structure, STRC holders are paid before common shareholders, but after creditors. And unlike bonds, STRC has no maturity date. It is a perpetual preferred stock. So here are some key characteristics. So STRC actually aim to hold its value somewhere around $100 face value, so per share. The ideal trading range is like $99 to $100. Current yield is 11.5% annually. Dividends are paid monthly though, but however, the rate of like right now is 11.5%, but it's adjustable. And that last one is very critical. If STRC falls below $100, MicroStrategy can just like increase the dividend rate to attract buyers and push the price back toward the par. So that's why they recently raised the yield to 11.5%. If STRC rises above $100, the company can issue new shares through an ATM program, which increases supply and brings the price back down. This mechanism creates a price ceiling near $100, and there's even a second safeguard. MicroStrategy can redeem STRC at $101, which also discourages investors from buying far above the par value. Now, here's where the structure gets interesting. When STRC trades at $100, it means demand for the product is strong. At that point, Strategy can issue new STRC shares through its ATM offering that raises fresh capital, and that capital is used to buy Bitcoin for the company's pressure. But there's another step, because issuing preferred shares increases leverage. MicroStrategy also issues new MSTR common stock. And this would help maintain a stable leverage ratio. Currently, MicroStrategy leverage ratio is around 33%. To keep leverage stable, every time the company adds new preferred stock exposure, it must increase its Bitcoin reserves. And here's a classic example. Like if Strategy issues $40 million worth of new STRC, it will use that money to buy 40 million of Bitcoin. But to maintain that leverage, the company must add another $80 million of Bitcoin. So how does it do that? By issuing 80% of MSTR common stock shares through another ATM offering. So that proceeds are then used to buy more Bitcoin. So the math works like this. If STRC trading volume reaches $100 million in a day, about 40% of that could be newly issued shares. That means Strategy raises roughly 40 million. Then it buys 40 million worth of BTC using STRC proceeds. Next, it raises $80 million through MSTR stock issuance. That money also goes into Bitcoin. So in total, $100 million STRC trading activity, okay, and roughly equals to $120 million of Bitcoin buying. In other words, STRC effectively converts demand for use into structural Bitcoin accumulation. Another important idea for STRC is how it divides risk. STRC investors receive relatively stable income, very low volatility, and predictable yield. Meanwhile, MSTR shareholders absorb the remaining Bitcoin upside and volatility. So the structure splits Bitcoin exposure into two layers: yield investors on one side, Bitcoin upside investors on the other side. As how analysts would describe it, MicroStrategy is transforming Bitcoin exposure into two very different risk profiles. According to analysts, the system could expand significantly. MicroStrategy could potentially absorb $10 billion or more of that STRC demand while keeping leverage stable around 33%. The key conditions are STRC must trade near $100, MSTR must trade about its MNAV, so above 1. Right now, MicroStrategy's MNAV is around 1.2, meaning the stock still trades at a premium to its Bitcoin holdings. As long as that premium exists, issuing MSTR shares to buy Bitcoin actually increases Bitcoin per share for investors. Of course, the entire structure ultimately depends on Bitcoin's performance. If Bitcoin enters a prolonged bear market, leverage increases and confidence in the structure could weaken. STRC could trade below $100 and MicroStrategy may need to raise dividend rates to attract buyers. Short-term drops of like 5 to 10% in STRC price are possible during market stress, but analysts say the design allows the system to adjust gradually rather than collapse suddenly. The biggest real risk would be a multi-year Bitcoin bear market. So the bigger picture, what MicroStrategy may have built here is something very unique: a financial structure that turns global demand for yield into continuous Bitcoin accumulation. So STRC investors get income, MSTR investors get leveraged Bitcoin exposure, and Strategy keeps increasing the amount of Bitcoin in its treasury, which leads to a fascinating possibility. If STRC demand keeps growing, it could become one of the largest structural buyers of Bitcoin in the market. So definitely very fascinating, and I cover how to buy STRC on Roxham Exchange last week, and I believe there are some very promising product launching on Roxham TV very soon as well. So for those of you who are interested in buying STRC with your Bitcoin, because Roxham Exchange focus on pairing, so all the products you see going to pair with BTC instead of USDT or USD if you're from the TradFi world. So this is very, very interesting indeed. There are different products when it comes to like Bitcoin treasuries or global markets. But like point being, Roxham Exchange focus more on the spot trading mentality, so more buy and hold. But whereas the one-click trade, I find it very convenient to convert your BTC into stocks or whatever products you're interested in. So definitely go check out. And there are also, I could like have some tease a little bit. So there are some very promising products when it comes to STRC, but it's still ongoing, and hopefully I could share more news, more update in the next coming week. All right, so we will take a short break for now. And later in the show, we also have a special guest joining us today. So we'll be joined by Alex Berge, Head of Ecosystem Growth at Ark Labs. We'll talk about the future of Bitcoin infrastructure, the development of Arkade OS, and how new technologies could bring programmable finance and stablecoins onto Bitcoin. So don't go away. There's a lot more to cover.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go!
This is Alex. Alex spends most of his time thinking like a trader. still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place. This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Welcome back, everyone, and thanks for sticking around with us here on Roxum TV. So After the break, we are now joined by our special guest, Sir Alex Berge. Alex is the head of ecosystem growth at Ark Labs, a company focused on building new infrastructure to help scale Bitcoin and expand what it can be built on top of the network. Today, we're going to talk about Arkade OS, how it works, how new technologies could bring things like programmable finance and even stablecoins onto Bitcoin. So, Alex, welcome to the show. It's great to have you with us today.
Thanks for having me. It's good to be here.
Yes, it's good to have you here on Roxham TV Hong Kong. Well, since this is your first time chatting with the Hong Kong studio, why don't we start with a little bit background of yourself? So basically, how did you get into Bitcoin? Because like from what I heard, you got into Bitcoin quite early, right?
Yeah, it's been a very long journey now. It's actually pretty crazy to think of how fast times fly by. But I have been involved in Bitcoin since, it's been more than a decade, basically, more or less now. And originally I was only, I would say, probably curious and active participant in the ecosystem, mostly via all the social sort of networks or platforms, mostly online platforms. So generally Bitcoin Talk forums and Reddit. And eventually, some of my interests led me to engage with a bit of what was a very small and, just very, very small industry. Very few companies were building in Bitcoin. So those were small circles, and it was kind of easy, really, if you had an interest, to start interacting with those people. This is when I started having chats with, I was fairly lucky in that I early on started interacting with very interesting characters such as Greg Maxwell and Adam Back, who are, founders of Blockstream and just generally legendary developers in their own rights. And that eventually led me to actually having a position at Blockstream early on as a sort of community lead, interfacing between the company, their engineers, and the community as a whole. What was a very important point in Bitcoin's history during the whole block size debate. And so, Blockstream being kind of like a very engineering focused company, did not at the time necessarily have the right personnel in place to engage. And so what happened was you had a lot of questions from the community about the scaling initiatives and the scaling roadmap back then. And sometimes having the engineers that are deep down in the weeds of the details are not necessarily the most appropriate people to communicate those ideas. And so, I kind of served as a buffer. I'm not an engineer myself, but I have a good technical sort of general knowledge about the protocol. So I was able to kind of be that translator, if you will. And from that moment on, I was involved in Bitcoin industry on and off up until today. I had a short stint at Bitcoin Magazine a couple of years ago, and eventually, I just wanted to get a little more hands-on, and I found an opportunity to finally build something that I felt had a real good opportunity, a real good shot at making a big difference for Bitcoin. So here I am now with Ark Labs.
Yeah, that is a very interesting journey throughout your Bitcoin more than a decade history here. So, I wonder, you mentioned a big few names. So, for example, Bitcoin Magazine. So, you were you mainly focused on writing the content for Bitcoin Magazine, like explaining to viewers about the technical terms, how the technology works, or basically, like what was your role in Bitcoin Magazine?
Yeah, it looked a little bit like this. What happened was, if you roll back, probably 3 years ago, really now, there started to be this new, I think, energy and momentum in Bitcoin with regards to development, sort of like new creative ideas like ordinals and things like this. Had created this new phenomenon where there were new projects being built on Bitcoin, and one of the project, or at least one of the something that people really wanted to achieve, right, was to kind of create this new class, this new generation, if you will, of Bitcoin applications, and also most importantly, Bitcoin scaling protocols. So basically, how we had just kind of figured out that we might want to do something else with our Bitcoin, and people were throwing a bunch of ideas around. And since I had a previous relationship with some of the the owners and maybe editors at the time of Bitcoin Magazine, I was in conversation with them, and they needed someone to again help them communicate this new phenomenon to their reader, and to be able to kind of separate the hype from what was actually good signal and kind of worthy ventures. And so this is when I joined the team kind of as a mostly kind of like in the technical editor role, and was able to just produce content and coverage, going to conferences, talking to founders of these projects, and writing about it. And it's funny because at the same time, this also kind of in some way is what led me to Ark Labs, because I had started having a conversation with Marco, our current CEO, about the project even back when I was at Bitcoin Magazine. And the technology that they were working on was something that I was very excited about myself, and independently of the company. I had discovered when that specific technology was revealed, and I thought it was a fantastic idea. So eventually, through conversations with Marco, one thing led to another, and again, wanting to really get a little more of kind of being in a position where I was able to use my energy not only towards doing commentary or coverage or explainer, but building something. This idea of being able to create eventually down the road, products and services that would facilitate the lives of Bitcoiner and create new opportunities, and I think just generally expand the role of Bitcoin in the economy was what really drove me to join the company.
Yeah, I mean, that sounds very fascinating. Like, especially after learning about your story, like you started at Bitcoin Magazine. Like, I'm sure throughout the years you honed your skill when it comes to looking at different projects and breaking down very complex idea into like everyday users, everyday viewers or readers would manage to understand those like very complicated technology, the idea of Bitcoin. So that's one thing I find it very interesting. But like jumping from doing content, writing articles to readers and viewers to actually building something, some infrastructure, that is a huge jump. So I wonder, like from your own experience, like you have done both of that. You're still building some amazing infrastructure projects. So like, what are basically the few steps or few skills that we need to hone before jumping from doing content, pure content, to building some infrastructure, building something great for people?
Yeah, that's a good question. I think you have to. I think for me, what was very useful is I had this ability to just this kind of multitasking ability, right? So not only do I have kind of like the technical chops to be able to evaluate technical proposals and kind of understand high level architecture of different systems, but specifically, I think what's important is understanding the human level and the human element. And this is why I said earlier, the developers that are deep down in the code sometimes are a little too divorced from that human element, and therefore they're not the best people to kind of engage on a social layer, and giving explanation or kind of quote unquote selling, right, the project. Because going from explaining content and writing content is kind of a very descriptive task, whereas in my position now as as the ecosystem lead at Ark Labs, my job in some ways is to kind of sell what we're building, right? I need to convince people that it's something that they should get on board with, whether as a normal user, so that the user can trust the products and services that are built on top of our protocol, or the builders, the founders, the institutions. I need to sell them on this idea that because you're thinking about an audience that has 100 different choices right nowadays when it comes to building crypto product. And I use the crypto umbrella because generally, this is kind of the reality of things. Although we'd like everything to be built with Bitcoin has had some limitations from that perspective. So, when you're creating an application or building a product or a service, a lot of times maybe you can't only limit yourself to, at least currently, to the Bitcoin sphere, although it is the biggest. So I have to have these conversations with people about what we're building with Arkade is the definitive solution, and you shouldn't go build on Ethereum and Solana and all of these things. So from my perspective, I think it is that human element, this ability to do exactly what I'm doing here, which is just being generally very, very comfortable and polyvalent in terms of being able to wear many hats, because this is what I do also at Ark Labs. Is I don't only create content about our products and Arkade, but really, since we're such a small team, and I was there from the very, very early days, I played a major role collaborating with the founders, with our CTO Andrew, in terms of strategizing our approach for go-to-market, strategizing a bit of even our technical architecture from that perspective. So yes, I think generally you have personalities that are simply writers and are able to understand topics, complex topic, and write about them. That's one thing, but I think it's just a question of being able to be multifaceted and having opinions about the economic part of things, having opinions about the scientific part of things, the market parts. And if you're able to get a solid enough idea of how all these pieces interact with one another, then you're kind of much more capable in terms of serving different roles, which is, I think, at least as far as my responsibilities are concerned, a big asset.
Yeah, definitely. Thanks for saying that. I really appreciate it. Especially a lot of viewers I know, they want to maybe get a row into in the Bitcoin world, but they just don't know how to start. So you're the perfect person for me to ask this question. Like, since you are the head of ecosystem growth at Ark Labs, a really fantastic infrastructure project. So that is a big row as well. So like a lot of our viewers, they want to get into Bitcoin, but they just don't know how. And I'm sure they're very curious of your day-to-day routine, like what you do as the head of ecosystem growth. Because like from what you told me, you're sort of like doing a little bit of everything, like the human element. So there are millions of people for you to talk to, going to events, I assume. And maybe like you mentioned a little bit about strategizing the infrastructure, how to make it better. That is, although very fake though, could you give me a little bit details? Like, what do you mean by strategizing and make sure everything goes better and goes smoothly?
Sure. I mean, I can give you a concrete example of a process that we went through in our journey throughout the last year, really, which is, when I joined Ark Labs, that was back in September of 2024. The mission of the project and the company was to kind of use this Ark technology as a way to facilitate Bitcoin payment. And so the scope generally was, the scope of things were very limited. We were focused on allowing people to make easier, cheaper, more convenient Bitcoin transactions and to receive them. And there's a lot of value being provided there, but also from a company perspective, from a market perspective, early on when I was having conversations with Marco, we started getting this feeling that, hey, like we're looking at the technology side of things, and on the technology end, we're thinking like it looks like this has more potential than just sending, payments from A to B. And then on the business side of things, when you got to realize, okay, what is the addressable market of Bitcoin payments today? And certainly we expect it to grow considerably in the future. But from a purely business perspective, right? Because at the end of the day, this is what we are. We're a business. So eventually, we got to make some money. We just announced a big raise, and so obviously, eventually, we're going to have to make it worth it for these investors. So we had to make a decision, basically, of okay, well, we need to make not a pivot, but expand the scope of our operation and the business and even the identity really of our company into. Okay, we went from a payment-focused company, and now we're a finance-focused company, right? And one of the decisions that we made also, because we don't want to close ourselves to opportunities, is that we like to say that we have Bitcoin foundations in the sense that we use Bitcoin technology to be able to facilitate all kinds of applications, but we don't necessarily have a Bitcoin identity. And what I mean by that is, the way that we present ourselves on our websites and specifically the more, the Ark Labs website, which is the less technical part, we try to stay a little bit neutral. We think that, the world, regardless of how good we think Bitcoin is going to be as money, the world is going to require and is always going to be there's always going to be other assets for people that want to trade, right? Equity, securities, those things are not going to disappear. And we like to think that although we want to put Bitcoin at the center of all things, we want to create a system where all of these types of operations are facilitated, interact with Bitcoin. And so, this particular strategy is an example of where, if you look at my role, head of growth, head of partnerships, or whatever you want to call it, it is about building relation with the ecosystem. If you look at my day-to-day, I'm talking to various technology developers. I'm talking to founders of companies. I'm talking to bigger, already established companies who are interested in expanding the scale of their operation. How do you increase the size of their own market, their own user base, from what they have now to 10 and 100x, right? And so I think a lot of times this involves having or adding utility, just be either improving the user experience or adding new functionalities and things like this. And so this is where we come in. But that part of building relationship across the ecosystem, which is my official role, nowadays I shaped my current role by being very strategic about what direction business-wise we were taking originally. So this is what this is what I mean about wearing many hats and kind of being very strategic about how you approach things and not being operating in a silo, because I could have very much made the decision that, okay, well, I was hired as an ecosystem lead, so my job is to build relationship and sell the product that I am being presented by the team. And if I only was doing that, then I would probably be still selling a payment solution today. And there's nothing. I have nothing against that. I think a lot of people are trying to solve these problems. They're very worthy problem to solve, but I don't think it's as exciting as what I am doing right now.
Yeah, so from what I just heard, you mentioned Ark Labs and also Arkade. I talked
Yes.
about Arkade OS a little bit in the beginning of the show as well, but
Mhm.
that's another technological term for our viewers out there. So, like,
Yes.
I'm asking you, as the used to be making content on Bitcoin magazine, managed to break down all the complex idea into everyday viewers would understand kind of manner. So, in simple terms, what exactly is Arkade OS?
Right. So Ark Labs is the company, behind Arkade OS. Arkade is our sort of product, if you will. Arkade is our platform. It's a platform that is open source. It's a platform that is not proprietary technology. It's something that everyone can audit and look at the code. And that's important because obviously we're dealing with Bitcoin and we're dealing with people's money. We're not in control of anyone's money, but the protocol that we created is used to coordinate economic actors and to coordinate economic activity. And so the Arkade protocol is based on an original proposal that it was called Ark, A-R-K. And what we did was we kind of took the technical elements of the Ark protocol, those kinds of primitives, and then we shaped them into a platform that everyday developers and companies and business and users can interact with without the complexity of the technical part. So we kind of created Arkade to abstract a lot of the technology components with always without introducing any sort of counterparty risk. So again, what is Arkade? Arkade is a platform to facilitate programmable finance on Bitcoin. It's a way to build smart contracts directly on Bitcoin without requiring any sort of other blockchain or other token or any types of bridge mechanism that often these kinds of solution, or even centralized parties, you can obviously do finance on Bitcoin with Bitcoin by moving your Bitcoin to an exchange. Unfortunately, that comes with counterparty risk, and as we know, in some cases, this creates unfortunate scenarios where the exchange might be compromised and people lose money, or maybe operationally speaking, what the exchange was doing, like obvious example like FTX, where they were not really above board and unfortunately lost a lot of people money. So our vision is, okay, well, we have a we have like an asset that's over $1 trillion in valuation. People have been using it as a savings vehicle more than anything, and to a certain respect as a payment technology. But a lot of that value kind of still remains dormant because people are not able, or people are not willing to move their Bitcoin into a centralized system just so that they can maybe get a loan against those Bitcoin. There's a certain segment of the industry and certain segment of the user base that is fine with taking that risk. And in a lot of cases, there are great companies out there that are more or less centralized that offer these products. But ultimately, the value of Bitcoin as an asset, right, is this idea that you don't necessarily have to trust anyone to kind of use it on a daily basis. So our mission with Arkade is to kind of create this platform where you're able to build contracts on chain that remove this counterparty risk. So what are the examples of that? Well, you can think about lending contract, but you can also think about very simple thing, like say I have a stable coin on the Arkade platform and I want to exchange it for Bitcoin. I want to buy Bitcoin. Maybe my employer pays me in stable coin and I want to exchange it against Bitcoin. Well, there's a different, again, you can send that stable coin to an exchange and you're going to be able to buy Bitcoin there. The beauty of things with something like Arkade is that we have contracts that allow you to do this in a completely trustless way. So someone else is providing the Bitcoin and you're creating a transaction with your stable coin, whether it's Tether or USDC, and the exchange happens in what we call atomically, and therefore there's no middleman, there's no trusted third party. You get your Bitcoin, the seller gets their USDC, and everyone's happy. So I think this is kind of the basis of where we sit at, and ultimately it really is about I think opening up the next cycle for Bitcoin, which we feel is much more of a financialization cycle. I think this was kind of the missing component and between what people have been discussing, which was, okay, Bitcoin is a store of value. How do we get it to this point where it becomes this medium of exchange? How does it become this currency that everyone uses to transact with on a global basis, not only for certain niche markets, but really kind of be in a position where it takes over the dollar as kind of like this global reserve currency. And I think the missing link here was kind of like this financialization, right? This ability to create all types of operations that are very common in finance. And, when you say financialization, it's a bit stigmatized. I think a lot of, especially Bitcoiners, feel that whenever there's financialization involved, there are, there's scams, there are things that, feel very fiat. But really, financialization a lot of times happens to be things like, okay, well, how do you reduce your risk? How do there are things that are happening in the market. You're holding certain assets, and during different economic downturns or whatever, how do you manage risk? Managing risk for the average person who doesn't necessarily hold a lot of asset, doesn't necessarily have a large portfolio, and perhaps not even really a lot of savings. Managing risk is not always a notion that is familiar to the common person. But when you're talking about institution pension funds dealing with people's money, it's kind of one of their top mandate is to manage the risk, because you don't want to be in a position where, because of irresponsible risk management, people are losing large amounts of money. So financialization is about managing risk. It's also about reducing volatility or your exposure to volatility. And so how does Bitcoin gets from this journey through from store of value to medium of exchange? I think a lot of it has to do with reducing volatility, right? This is why a lot of people still don't feel comfortable accepting Bitcoin for payment, or perhaps holding Bitcoin naturally, is because over the years the volatility has compressed significantly. It certainly is less volatile than when I started getting involved, but it is still volatile. And yes, it's going up and to the right. And yes, if you hold Bitcoin for 4 years, if you have a long-term horizon, you're going to be fine. But it's just not, for a lot of potential users, you cannot just tell them, well, don't worry that Bitcoin dropped 10% today. It's going to go back up in 6 months. If you're a business that has operating cash flow, you need to pay employees. Like, you can't rely on that altogether. So this is where financialization comes in. This is where the ability to create financial products, to be able to offer to these economic actors to reduce risk. This is where it becomes interesting. And so Arkade is our way to address this. Arkade is our way to create a solution for the market where we are able to financialize assets. We're able to financialize Bitcoin, and eventually create things that perhaps indirectly users are going to be using through their apps on their phone. Users might not know that they're
One thing
interacting.
I still have in my mind is
Yeah.
that, like, from what I heard, is that Arkade is trying to build a platform, basically adding the smart contract layer, the nature into the whole Bitcoin network. So, like, speaking of smart contract, we know the factoring in smart contract is Ethereum, or right now
Yeah.
could be like Solana as well. So, like, why don't we just use the chain that is like doing the best when it comes to smart contract? Like, why do we have to hop onto Bitcoin networks when all the products that is offering like DeFi or payments, everything is so mature on Ethereum network? Like, why we must switch to Bitcoin network instead?
That's a good question. And, it's interesting because I visited Hong Kong last year and the year before. And I interacted with a lot of Asian generally Bitcoiners who took a bit of a similar attitude. When what I mean by that is I think the appetite for risk sometimes will differ depending on the culture and things like this. And I would say that Western Bitcoiners, especially the Bitcoin maxis, are generally very opposed to using Ethereum to be able to borrow against their Bitcoin, or using Solana to do the same thing. Whereas it was interesting to me in my interactions with Eastern Bitcoiners, and people in Hong Kong, wherever they were from in Asia, where yes, it seems to a lot of people where that Ethereum works perfectly fine, Solana works perfectly fine, and they are indeed great products. A lot of times, even myself, I have a Phantom wallet for Solana, and I use it a lot with stablecoins because the experience is great. It's practically seamless, and the ability to have these more powerful blockchains, if you will, are very useful when you're trying to build a consumer product, because you're really able to get this fast reaction. There's no waiting for confirmations and things like this. But obviously, a lot of this comes with downsides, right? There's a trade-off to using these platforms. And again, the big trade-off is having to trust your money to these platforms. So if you use Ethereum or Solana, you're having to deposit your Bitcoin into what is called a bridge. And effectively, the Bitcoin becomes controlled by a third party. There's an entity, depending on the scheme that you're using, who effectively could spend your Bitcoin without your authorization, right? And so, there's a lot of layers of protections that can be created at a bit of a legal level in the real world to kind of avoid these entities doing this. But I think just generally, when you look at the history of crypto and bridges, especially on things like Ethereum, it's a long history of failures and exploits and really unfortunate disasters where probably at this point a cumulative $1 billion more has been lost by users because of these types of systems. And so ultimately, I think a lot of, like I said, there's a certain portion of users that are fine playing with these systems. I think generally those are users that are more familiar with the technology. You would not expect necessarily the average person to go using the Solana blockchain and the Ethereum blockchain, although it has been made quite convenient. But ultimately, there's always going to be actors where perhaps dealing with a lot larger, significant amount of money that don't necessarily trust these types of contracts, don't want to if you're managing hundreds of millions of dollars, you're probably going to think twice about putting your money in one of these bridges. And so this is where building a Bitcoin native solution comes in, is we don't require you to make this trust trade-off. We're giving you the smart contract platform, but we're also preserving you the ability to be the only person that can unilaterally control your money. And so, ultimately sovereignty and this reduction in counterparty risk, it also translates in the market in terms of prices. It's going to translate in terms of, the more the more risk there are, I think generally the less liquid the markets are going to be. And that means that for whatever service or product that you're looking at, the cost of it might be increased. So we're looking to build very, very liquid system where people are able to use Bitcoin in a native way. And Bitcoin should be the biggest platform in digital finance because it is the biggest asset. And so ultimately there will be no need for other blockchains like Ethereum and Solana.
Yeah, I kind of want to go back and ask a beginner technical question. Like, from what I just heard, like Arkade is basically another chain on top of or next to Bitcoin. If I'm getting that part correctly. So, do we still have to trust Arkade? Like, of course, we know the underlying network is going to be Bitcoin, and Bitcoin has 100% uptime, so there's no issue there. But do we still have to trust Arkade, or basically all these different solutions or smart contract platforms that it will work 100% of the time? Like, is there still risk involved, or would you argue so is something different?
I mean, there is definitely some level of risk involved. It depends on what platform you're using. In the case of Arkade, the beauty is actually that we're not building another chain on top of Bitcoin. The beauty of Arkade is we're only using normal Bitcoin transactions. And what we're allowing users to do is to coordinate with a server and other users to sort of create off-chain, we chain transactions outside of the main chain. So we're able to do, operations outside of the Bitcoin main chain, but eventually settle that into the layer one, so that we're able to get this finality, this confirmation that we create. But whenever a user is interacting with another user via Arkade, there's no other blockchain in the sense that there's no sets of validators that are responsible for enforcing consensus rules and enforcing, especially that the money, the Bitcoins that are involved in these operations are secured. Now, really what you're doing is you're creating a Bitcoin transaction, you sign it over, and the server is going to sign it over, and there's going to be these chains of signatures that are going to kind of create these sets of operations. But the most important part is that you always preserve a backup transaction. So basically, if the server, which everyone is using to coordinate the activities, disappears tomorrow, everyone still has a backup transaction. And this is very similar to Lightning in that respect. So some of the viewers might know Lightning and this ability in Lightning to create with a single party a channel of transaction. And in that channel of transaction, you always have a backup transaction, which you can use if your counterparty goes offline. And so with Arkade, it's a bit of a similar process, except it's very multi-party, right? So there's one operator and a lot of users interacting. And every user has a backup transaction. And so there is no scenario where the operator gets compromised, or maybe the operator is malicious and tries to spend one of the users' Bitcoin. They're not able to do this. The users are the only one that can unilaterally put their Bitcoin in a vanilla Bitcoin transaction and gain complete control over their asset. So from that perspective, it's mostly trust minimized. It certainly is better than all of the alternatives out there that require, trusting Ethereum bridges or Solana bridges or things like this. But there are some caveats and some nuance about certain operation that could be facilitated where you're trusting a little bit more the operator. But generally, we're very explicit about those. Now, I don't think this is the right format to present all of these edge cases, if you will. But generally, yes, the trust assumptions are really good. And this is why in our conversations with partners, they feel like Arkade is a unique solution.
Yes, that does sounds very interesting about Arkade OS to network. So speaking of the smart contract layer, like one thing people love is about Ethereum or Solana. Basically, all the other chains out there is a DeFi nature. So on Aave, they managed to do lending or borrowing protocol. So I want to ask you, in your opinion, what is your favorite Bitcoin DeFi app right now, maybe on the Arkade OS?
Yeah, well, I mean, the two interesting ones, obviously, we're only just getting started. So the partners, mostly a lot of the partners that we have are still building the entire stack, and the Arkade network is still in beta. But very quickly when we launched, just to kind of demonstrate the abilities of Arkade, we had one of our very close partners, the team at Lambda Swap or Lambda Sat, and they were able to build a Bitcoin collateralized loan platform and also a sort of cross-chain mechanism so that you're able to exchange your Bitcoin for example, stablecoin on Solana or stablecoin on Ethereum. And the Bitcoin, the loans platform, the Bitcoin collateralized loan application is very impressive only for the fact that the user experience and the potential for user experience is night and day if you compare it to normal Bitcoin backed loan systems where, well, either you're fully trusting a centralized custodian, therefore, none of this lives in smart contracts. But there are ways that, people have discussed ways that you're able to do it on Bitcoin, like on chain in a kind of very standard Bitcoin transaction. But unfortunately, what happens with on chain, right, is you have to wait for Bitcoin blocks for confirmation. The fees can be very volatile. And when you're having to create these experience for applications, it doesn't always give the best result. Whereas, if you use the Landesat application to borrow against your Bitcoin right now, and even though the application is still kind of I would call a prototype right now, you're able to see how quickly everything happens and how almost instantly you commit your Bitcoin collateral and you receive the stablecoin on the other chain. And all of that happens very quickly because it operates off-chain in the Arkade environment. Now, there's a lot of different products in DeFi and smart contracts, which we can talk about that I think are very interesting. And I won't go into the details for all of them, but one thing that I think people are looking ahead for and is this ability to earn yield right on your Bitcoin. Now, again, that idea of earning yield has a big stigma around it. I think there's been unfortunate history where people have advertised yield and people have lost their Bitcoin. But ultimately, there is an opportunity to, again, kind of create financial products where people are able to put their Bitcoin into a special account. And by putting their Bitcoin there, they're able to earn a return, a dividend maybe. When you think about all of the things that Michael Saylor is doing, it kind of is directionally along the same lines. And so and again, those products, you don't have to be a special finance whiz to be able to necessarily understand them. I think the beauty of the smart contract on Bitcoin is that you're able to create experiences where these things are integrated into application, again, in a way that is completely abstracted from the user. So all the technical stuff of, all the smart contracting that, again, the average person doesn't really want to hear about this. All they want to see is a new feature on their phone, on their application that is able to give them 5% return on their savings, in a way that is secure. Some people might inquire about the security of things, but generally that's as far as they go. So yeah, those are some of the stuff.
Speaking of how that works, like you mentioned the example of giving yields, I mean, ultimately that most users what they care about, right? So we have to be honest here. So one thing I find it first of all, I have to congratulate you because I noticed there's recently this announcement, this partnership going on with Tether. Like, could you share a little bit more, like adding the stablecoin nature onto Bitcoin infrastructure? How would that work through Arkade? You mentioned there are some prototype, for example, like Lender Swap app, if I remember that name correctly, still in beta stage. So like, how would that work, for example, on Lender Swap app?
Yeah, I mean, that's a great context actually, because again, as far as Tether goes, obviously we are privileged to be able to welcome them as an investor in our seed round. We were lucky enough to be able to build a relationship with the team, and obviously their success speaks for themselves. And the important thing for us is really that if you're building a financial ecosystem on top of Bitcoin, as I said early on during our conversation, you need other assets at the end of the day. If you only have Bitcoin, you're kind of limited in the amount of things that you can do. And what is the number one most popular asset in the world, even today, as much as we love Bitcoin, it's the US dollar. And so Stable coins are a prerequisite really to build a healthy financial infrastructure. And obviously, for us, the opportunity to work with the number one stablecoin issuer in the world and have the ability to, once we figure out all the mechanics of this, to be able to issue Tether in Arkade is going to be a significant advantage to the people that are building with Arkade. And what does that look like? Well, you put it in a very pretty good context, which is, well, if you're talking about the Lendasat users at the moment, if you're having to borrow against your Bitcoin, or if you're having to borrow against your Bitcoin for dollars, well, right now, the dollars that you're going to borrow are going to be stablecoin, and they're going to be on Ethereum. So now you find yourself having to also have kind of an Ethereum wallet, or kind of a wallet that supports stable coins on Ethereum. And because of these things, the user experience just gets degraded, right? And so what we're hoping to do is that soon enough, once you go to Lendasat to borrow against your Bitcoin, what you get is a Tether asset that's directly issued on Arkade. And the technology for that is rather simple. We add additional data to just normal Bitcoin transaction on Arkade, and the operator, the Arkade operator, that server that you interact with, kind of interpret that data, and the users are then get to be able to, instead of just spending small amounts of Bitcoins, there's kind of a data that represents an asset that's attached to this. And once you get stable coins, this is where one really important point to really attract liquidity. It's all about the liquidity. And if you look at actually what are some of the most, like, the biggest use cases in DeFi, if you will, on Ethereum or Solana, whatever the chain, it's just the ability to exchange Bitcoin against stable coins, right? You have big, what they call liquidity pools in Ethereum or Solana, and it's liquidity pools are an opportunity for anyone with any amount of Bitcoin or stablecoin to exchange them for one another in a way, again, that is trust minimized, that doesn't require a counterparty. And so we think that even just the opportunity to bring that use case to Bitcoin in a native way is going to be a game changer, because now people that are trying to exchange very large amounts of Bitcoin for stable coins are going to be able to do that without, again, using another chain and perhaps compromising the security of their asset.
Yeah, I mean, I happen to agree with you, especially when it comes to the usage of blockchain. I hate to say that to users or viewers out there, that I'm afraid stable coins are still the #1 use case in the whole blockchain technology. So, like, my next question I want to ask you. So now that stable coins are in the whole like in the
I mean, I think in the next 5 to 10 years are going to be extremely interesting. And my vision is for us to be able to, I think, compete with the phenomenon that is being observed right now in traditional financial market. What I mean by that is, what do you see when you look at traditional financial markets at the moment, and Bitcoin? It's, again, this financialization effect. Bitcoin is entering a sort of capital market phase, and now it's one of the biggest ETF in the world, exchange traded fund in the world. And you have, BlackRock and all of these large institutions that are starting to contemplate creating financial products that are collateralized by Bitcoin, where Bitcoin becomes this new source of capital, this new asset on top of which different instruments can be created. And again, the biggest example of that is Michael Saylor. and what his company's strategy has been doing, which is extremely interesting, really. And it's this ability, when you think about it from a first principle approach, is simply the ability for people to get limited exposure to Bitcoin, right? So what does Michael Saylor do? Is he says he takes a bunch of his Bitcoins, and he says, listen, I know that you might not be willing to stomach the volatility of Bitcoin, and therefore I created a financial product for you that gives you a certain amount of the upside. So you're able to get this yield we were discussing, right? Where you're able to get some of these returns without a lot of the downsides that come with holding Bitcoin for long periods of times, where, even just in the last year, we've seen Bitcoin go from 130,000 all the way down to 60. We're talking about a 60+% volatility. Those are things that not everyone is able to manage. People need to be able to, again, protect themselves against this volatility. So Michael Saylor figured out, well, listen, I have 700,000 plus Bitcoin. I'm going to create products that are collateralized by this, and depending on whatever exposure you want to have, I have a product for you, right? And that is playing out real fast right now. And obviously, he's created a bit of a flywheel where now he's able to accumulate very quickly more and more Bitcoin. And all the credit to him. It's a fantastic, I think, sort of step forward for the Bitcoin ecosystem, and it is very, very important what's happening right now. But ultimately, when we think about the ideals of Bitcoin, and when we think about what kind of system we're trying to build, ultimately, it's a system that hopefully does not create this large counterparty risk that is being created at the moment, right? Because ultimately, although Michael Saylor is operating in the US under securities law, and there's all kinds of, legal restrictions about what he can do, there's audits and all these kinds of things, problems happen. And ultimately, we're talking about a very large amount of Bitcoin that is supporting products that is being used by hundreds of thousands of people and soon millions of people. And so if something happens to those Bitcoin, it's going to be catastrophic, right? So what we want to do in 5 to 10 years with Arkade and DeFi and smart contract, I think, is to kind of create an alternative system to the current traditional finance, where these types of products can be built without the trusted third parties, without the counterparty risk. And we're going to have a lot of catching up to do, but when we have Arkade with stablecoin, once we finalize a bit of the roadmap that we have, we think that this could accelerate, because again, a lot of the market that Michael Saylor is using is the US financial market. There's an opportunity across the world, right? And so the beauty of technology like Bitcoin is it's permissionless, it's global, and so it allows anyone to build new kinds of products, and you never know what great idea someone else might have that is not from the US or whatever. But the great thing about permissionless platform is this allows anyone anywhere to buy or use that product. And so I think it's going to be a bit of a race. It's going to be a bit of a race between us and Michael Saylor in terms of building. Maybe there's going to be a Bitcoin treasury company living directly on Arkade in the future.
I mean, I love that. I'm sure our viewers out there are very looking forward to actually test out some of the products from Arkade and maybe use some of the Bitcoin DeFi apps on top of the chain as well. So, Alex, it has been great to have you on Roxham TV Hong Kong. So, for our viewers out there, if they want to learn more about Arkade, or basically just to get your perspective about market or Bitcoin in general, or maybe some updates about the project, where's the best way to reach out to you?
You can reach out to us or to me, myself, probably via X at BERGE Alex 4. or Alex at arklabs.xyz. Otherwise, arkadeos.com is our website. And if you want to try Arkade today, we have a small application we've built, wallet supporting Lightning payments, supporting loans through Lendasat. It's at arkade.money.
Amazing. But unfortunately, that's all the time we have for today. So thank you so much, Alex, again, for joining us. And thanks again to our guests for coming on the show and sharing those insights. So if you enjoyed the conversation, don't forget to, we actually have more shows lined up here on Roxham TV, but with other hosts, so make sure to stay tuned for that. As for my show, I'm here Monday through Friday at 3 a.m. Eastern Time, bringing you the latest stories across Bitcoin market or global news. So make sure to follow me tomorrow as well. Thank you guys for watching. I'll see you all tomorrow.
Some call me Chicken Little, others